Hey, Ian, it's another edition of the Friday Ian cast. And we got a lot going on, so let's get started. What do you think?
All right,
Yeah?
let's
All
do it.
right. Yesterday we had a whole bunch of earnings: Apple, Facebook, Amazon. Who am I missing?
Let me think. There were a lot. I mean, for some of the smaller ones, Pinterest reported their
Yeah, yeah. But
27.
let's just go quickly because the Nasdaq pre-market,
Yeah,
which you and I we don't always trust because well, I mean the Nasdaq being up pre-market is more trustworthy than the Dow because the Dow is really like a price-based index, super easy to manipulate. It's what anybody that's looking to shift the market mood. I mean, with not that much capital, you can move the future Dow futures around. Nonetheless, Apple reported good earnings, and everyone knows I've gotten, I'm negative on Apple. Nonetheless, they report good earnings. The stock is being bid up 6% in the pre-market, and important for the Dow and not so much for the Nasdaq because that's capital. That's a cap-weighted index. They're going to split the stock 6-for-1.
right.
Yeah.
Yeah, that was a pretty big announcement. Not really very expected, but like you were saying, we were talking a little bit before this about how that's going to impact the Dow, because that's a price-weighted index. So the higher the stock price, the higher it affects the Dow Jones. Obviously, 30 stocks are in there. Apple was one of the highest, if not the highest
Right.
price stock in there. So it was the number one driver of the Dow Jones. Now that it's going to be split 6-for-1, it's going to have way less of an impact on the kind of moves that the Dow Jones has.
Right. Right. And From our perspective, we've obviously, well, not Ian. I've gotten Apple stock wrong completely, largely because it's still true that they have wasted a historic opportunity by choosing to buy back stock, $300 billion plus worth of it over the last 4 years.
Right.
What is their best innovation? The iWatch? I mean, as everyone knows, I've been wrong about Apple stock now for some time. Nonetheless, it doesn't change the stock making all-time highs. I get it on some level. If you've got, the kind of, buyback firepower that they have, spending 300 billion plus over the last 4 years on buying back stock during a period of historic opportunity,
Right.
where you could have really, you could spend money to change the world. You could spend money to dominate history theoretically, and they are focused on the stock price. And to some extent, Ian, their decision to split the stock does tell you that this is a company and a management that is focused on the stock price.
Yeah, exactly. It's definitely an interesting strategy. No company has really done anywhere near the amount of stock buybacks ever that Apple is doing. They're not really showing any signs of slowing it down or putting that cash to any better use. So, you know, it's not going to be long before they really run out of options. They have to put the cash to some other use, or else I think I figured it out. They were down to 10 years or something before there would be no shares left. So the time's kind of running out for them at this point. And SoftBank was just trying to sell them ARM, which is or part of this company called ARM, which is like a really advanced chip company. They didn't want any part of it. Now NVIDIA is trying to buy that part. So they're getting, bid out for, these really innovative companies they could be putting cash into and growing their business. And they're really just not really seeming to put any attempt into that at all.
Well, I mean, there's massive leaps going on as we focus on at Bull Profits and on Eancast. I mean, with respect to so many aspects of human life where we can now jump, like, and not incrementally, like jump by implementation, whether it be of artificial intelligence, blockchain, Internet of Things, robotics, so many different ways where Apple could put,
Yeah.
forget 300 billion, even 50 billion put towards this would matter. However, their focus is clearly on the stock price. And in addition to that, they are borrowing money. While they're bringing in a lot of money, they continue to also borrow money, take advantage of low interest rates to
Yeah.
pay out a dividend and to fund the stock buyback program, which for sure, I have no idea when will end badly. We have never seen one end well. It will end badly because ultimately their business is about innovation, and this is a period of historic innovation. And compare
Right.
this, Ian, to the sort of like some of the other heavyweights that reported today, Amazon, Facebook, and think how much open-ended innovation there is still going on in these already very large companies.
Right. Yeah, they're both trying to expand into as many areas as they can because they see that innovation, whereas Apple is mostly just focused on really just keeping up what they've done in the past and not really adding anything on.
Yeah, I mean, Amazon, my guess is drone delivery cannot be far away. Additional
Yeah,
implementation of artificial intelligence for shopping and additional purposes beyond that is definitively coming sometime soon. Obviously, the AWS platform just completely and utterly dominates the
right.
internet, and there are other businesses that are percolating underneath there that act as a growth stimulant, as an innovation stimulant for Amazon. Facebook, you think about even Oculus Quest, which is largely very few people think about. However, the app sales for Oculus, have been like rocketing up during this pandemic.
Yeah, absolutely. And I have an Oculus Quest, and it's a lot of fun actually. And I've bought a bunch of games on there, and yeah, it's obviously if people are stuck at home, that's like the coolest kind of game you can play right now is VR. So that doesn't surprise me one bit, and that is a very good part of their business that they bought before really anybody knew what VR was going to become. I think it was like back in 2014 or maybe a couple years after that, but it was a while back, and it's turned out to be a really good investment for them.
Yeah, it's a great way, really, of framing America 1.0 versus America 2.0. America 1.0 is Apple taking money and essentially buying back stock, paying dividends. America 2.0 is like, hey, we see incredible, phenomenal
Right.
opportunity out there, and taking that money and investing it into all of these things that can obviously improve life, make things more accessible, convenient, cheaper, things that we do every day. That's the essence of innovation. And Facebook and Amazon reflect really the growth elements of it. And obviously, Apple stock continues to get bid up. If Warren Buffett, has cornered whatever $120 billion worth of it, and if people are willing to follow him, and it's a huge part of the index, it's going to continue to get bid up.
Yep.
Yeah.
Exactly.
And from our perspective, we understand what's going on there. And Apple being, going up still represents a stability point to the indices that gives people confidence to buy other things. What will happen over time is other stocks will rise in value, and Apple's growth will slowly shrink. Its stock will shrink out, and then it will start to become of less importance to all of these indices. And then it'll be irrelevant as to what it does.
Right.
Yeah. And in terms of the overall market, the Dow Jones, as while many people, focus on that, and we're aware of it, this is a very America 1.0 index that
Yep.
we expect over time to be transformed as it has been over its entire life. In other words, the Dow Jones from 100 years ago is very different from the Dow of today. And the Dow, if it exists 100 years out, will be very different than it is today. So we definitely expect, all of these very America 1.0 companies, ExxonMobil, I don't know, what else can we think about? Wells
Uh,
Fargo,
Travelers insurance, stuff like that.
Travelers Insurance.
Yeah.
Right. Yeah. I mean, well, we expect all of that to largely go out. Maybe the committee in that like puts the things in, maybe they'll put Bitcoin in. Why
Yeah.
not?
It wouldn't surprise me one bit.
All right. Well, we are still bullish, optimistic, positive about America 2.0 stocks. And we believe that there's enough now of those stocks really in the NASDAQ 100%, to a
Right.
lesser extent the S&P 500, and
Yeah.
to some limited extent maybe kind of sort of in the Dow. Maybe I definitely want to hedge myself. It's in there, and I know that in my America 2.0 presentation I say the Dow will hit 100,000. However, I expect the Dow to be constituted of completely different stocks as that happens. I just want to make this clear because there's some confusion. People's like, hey, Paul, you say stuff about the Dow, but it's in there. Just remember, that's not a permanent set of stocks that's in there. It does change. And if you want to track, what we believe is going to be a transition to America 2.0 stocks in the Dow, follow our colleague Patrick Goodrich that reports on this regularly in our free e-letter, Bold Profits. Sign up for it at boldprofits.com. We'll take you there, and you can follow. And Patrick goes on this pretty much week after week, telling you how this is going to happen, what the likely companies are. So it's a journey that is for sure going to happen. Nonetheless, don't take anything we say as any indication that we are negative in any way, shape, or form. It's a period of extraordinary, incredible opportunity right now that we believe is going to go on for some number of years. And if you're interested in watching the America 2.0 presentation, just click on the strong hands above. It's going to take you to my America 2.0 presentation. It tells you really about this historic moment in time, this historic opportunity, and how you can take advantage of it. All right, Ian. So we touched on Bitcoin, and I just want to put up very quickly, for a second or so, some of these articles that I found talking about something that we mentioned when Bitcoin was going through its halvening, which is that miners were going to go out of business or cease activity, which then was going to cause fewer and fewer miners to be there, and fees would spike, and there would be insufficient number of Bitcoins. All of that is now unfolding.
Absolutely, yeah. And the other day when we saw Bitcoin, pop from 9,500 to 11,000, a lot of these miner stocks were up 30%. And I tweeted about that. It was Hut 8 and Argo blockchain and Hive blockchain. These stocks, because they're some of the only miners left. They're some of the biggest in the world, and they're publicly traded. So we can see in real time how, the sentiment around miners is going from the stock market. And it's, these stocks are starting to really make a move higher. Of course, because Bitcoin going up, they can sell the Bitcoin for more. So the price of Bitcoin is directly correlated to their sales. And of course, the fees are a big part too. So where there's less Bitcoin being mined, meaning they have less to sell, the fees are definitely making up for some of that, and they're jumping like crazy as well.
Right. So here's two articles. One from Decrypt. We always like to support the people that we cite in the Incast. So Decrypt has a article which is as of July 29. Bitcoin fees have spiked 500% this month. We'll just put that headline up very quickly. And then here's another one. I believe this one's from Bitcoin.com. Bitcoin fees skyrocket 590% since mid-June.
Yeah.
And so just shows you that, in a way, how brilliant the Bitcoin construction is and how it drives its own scarcity, and how that there's a very natural dynamic to post the halvening where people are now only get half the reward. That obviously runs a bunch of people out of business. And then the Bitcoin price has to rise to make it worthwhile to go mine the Bitcoin. And this is something, if you go back in our videos, we talked about, which is that it is sort of constructed to be kind of inevitable.
Yeah, absolutely. The scarcity drives the value. That's really as simple as it really is. Yeah.
Yeah, I mean, and that's been true in human history. Not everything that is scarce has value, but the vast majority of things that have value, have some scarcity element to it. So Bitcoin is one of them. And I also I don't have the article here, but I saved it. Ethereum fees are also up 1,300% since April, and and because there is now, I mean, more and more activity on the Ethereum network or blockchain, however you want to put it. There are essentially two ways of referring to the same thing. And the fact that Ethereum fees are up this big, you know what that does, Ian, is that it causes people to want to search out other networks.
Yeah, for sure. And there are plenty of them out there. Ethereum, they're in the process of scaling, so they're going to be able to handle it at some point. But right now, when the fees are so high, yeah, it's going to be great for the whole blockchain ecosystem because these other projects that are just starting up don't want to pay all these crazy fees. So they're going to look for some of the other alternatives to Ethereum, which is going to help the crypto market in general because competition always drives markets.
That's right. And competition drives innovation. Competition drives cheaper prices.
Yep.
So many aspects of it. And in truth, if you're thinking about all of the world's data, which will end up on various blockchains, various data needs to fit in slightly different ways, requires different number of nodes, requires a different level of mining. People will find the right blockchain that is appropriate for the kind of data. If your data is very dense, you might need a slightly different blockchain, perhaps in Ethereum. If you want a very fast blockchain, you might need a different network. Nonetheless, it does look like the crypto market is seeing, I believe, a significant amount of money pushing in.
Absolutely. Yeah, especially into the smaller coins. Some of them are up like, 1,000% over the past few months.
Right, and Bitcoin is now over 11,000, so it's a new high for 2020.
Yep. Yeah, I saw
not
that.
a 52-week high. It's a new high. So it's it's gone up past the crash moment in March, where it was at peak of 10,500. Now it's about, I think when I last checked before coming on, it was about 11,200.
Yep.
Ethereum is also, I believe, in the same territory. I think Ethereum's fairly close to making a 52-week high.
I think, yeah, if it hasn't yet, it's very, very close.
Right,
Yeah.
and that's pulling also, those are the two big ones. And those in all likelihood will continue to be the largest ones based on my experience, which, we've gone into, which is that the leaders that have the big lead tend to continue to lead, and they carry the rest of the market with it. And so we would expect those two to continue to lead, but then there's also going to be, given the scale of the opportunity for crypto, and we were laughing earlier about travelers, insurance companies, banks. I really don't see any real future for any of them.
Yeah, I mean the crypto world is finally starting to emerge. There's already a crypto or Ethereum based platform for international trade, so people can get loans for trade, finance their trade through the Ethereum blockchain now, which is kind of unbelievable. And there are companies now handling millions and millions of dollars worth of loans through that. So it's already starting to happen.
Yeah, I cannot wait, Ian. Some of the innovations that crypto can do for, let's say, just like that market, obviously, because so many different players, and where trust is such an important thing, and trust relates to largely not having the same information at the same time, or the lag between money flows between one place and another, which then causes people to ask for deposits, and then all this enormous amount of paperwork and bureaucracy, which crypto can largely eliminate by having simultaneous transactions, simultaneous transparency. So extraordinary things that can really happen. And truthfully, I cannot wait for mortgages personally to go on to, because to refinance a mortgage today, I don't know if you've tried this, Ian. Wow, this is brutal. You cannot wait for some of these innovations to come and wipe out the old ways and to implement new ones. Nonetheless, we've done crypto. We are bullish, optimistic, positive on Bitcoin, Ethereum, and the crypto market in general. And we do have a little bit of participation in crypto in Profits Unlimited, which is my flagship publication. Ian's got a number of crypto and crypto, not direct crypto, but crypto related, right? That's mining, and crypto related companies in his $10 million portfolio service. So if you're interested in those, you can check into those two publications. Okay, let's quickly do cannabis. So preparing for the Ian cast, I saw this article from Benzinga, which says cannabis sales for 2020 surpassed 2019 on average. And then we quickly put that chart up, and you can see, Ian, there's a big spike in March as people kind of go to be like, hey, we're not going to leave our houses, go buy up, hoard up. But then it continues from there.
Yeah, I mean, it's constantly expanding. I'm always seeing new headlines about, the big companies opening new dispensaries and new places. And yeah, during the lockdowns, it was deemed an essential service, so the stores stayed open. Their sales continued to be strong. A lot of them started delivery services or expanded their already delivery services. So yeah, it's been a really, really big deal. And a lot of the US companies are now making 52-week highs, which is a great sign. And I think the Canadian pot stocks are going to follow suit very soon. This earnings season, I expect to be good. And, during this kind of time, when stocks have struggled so much for so long, the volatility is going to be big and the buying is going to come in big waves, and there could be big pushes down too. For example, Afria, which I tweeted about, reported their earnings, and the stock was down like 16% or something like that. But, it's still up, I think, 48% since the first big sell-off, which was in late March. So it's had like 20% sell-offs or corrections, whatever you want to call them, since then. But, in 4 months, it's still up 48%. So we're going to see big jumps in the stock and big, but not as big, corrections, dips, whatever in them. The volatility is going to be pretty high, but, that's how it is when a company's first starting to recover from such a big crash. And overall, these stocks are really going to surge up higher, over the coming months.
And I saw that you got an instant troll when you tweeted that, and then the next day when the stocks dropped, I saw it's like, this didn't age well. You got an instant troll on that. People's time frames are so short. Generally speaking, we just want to say very clearly, like anything we talk about, generally we are definitively not day traders. We are looking for opportunities that are generally in the number of years at minimum. And so, we tweet something, we are not looking to, we are looking at something. Ian's tweet was like a reflection of a change in direction. In other words, where there's money coming in. So people, on the other hand, treat our information as if we are day trading, and we are not day traders in any way, shape, or form. We are, I guess the best way to put it is we are kind of position speculators. I think that's the best way. So other cool information from this Benzinga article is, something that surprised me, is that inhalables remain popular. Just put this chart up for a second, then bring it back down. Which, given what the nature of this virus is, and where some number of people with inhalation issues, have particular issues with this virus, that's kind of interesting. That hadn't fallen off.
Right. Yeah. I mean, the whole, the demand for all cannabis products is absolutely very, very strong, stronger than it's ever been. And, it's still not even legal, at least recreationally, in a lot of states. So, there's so much more room for this to grow. And, it's expected to grow. I think cannabis sales overall are expected to grow like 20-some% this year over last year. So yeah, it's a very, very good outlook across the board.
Right. So we are bullish, optimistic, positive on cannabis for a number of reasons. Number one, it's fairly clear to us that this is a very young market, and we sort of compare it to the early days of alcohol post, the end of prohibition, which is that the growth will be bumpy. Nonetheless, it's a very large and growing market, and you want to participate in it. And if you have a day trader's view, and it's definitely going to be a struggle. However, we are always looking at a multi-year view. So we are bullish, optimistic, positive on cannabis, and we've got cannabis plays in Profits Unlimited, which is my flagship publication. We've got them in Ian's publication, which is $10 million portfolio. We've got some in our small cap publication, Extreme Fortunes. I think those are the three places where we have it. So,
Yep.
okay, last thing to do in our usual Ian Cast Roundup. Ian, Tesla.
Yeah.
Um, People, of course, super excited about the stock price. And, I always just want to be like, hey, just chill a little bit because, nothing goes up in a straight line. I just want to,
Right.
we're not down in any way, shape, or form by Tesla. Just don't get us wrong. Nonetheless, do not get caught up in, there's always surges in demand for stock that lift prices up. And when you get that kind of, jump in a very short period of time, it's also at some point in time going to draw sellers. So everyone, Tesla stock, we believe, has a higher price in the future. Nonetheless, this will not happen in a day or a week.
Exactly. Yeah. And it can be easy to lose sight of that when it's going up like 700% in a year or whatever it did.
Right.
But yeah, I mean, the company is still on fire though. I just saw something about them planning a new big energy storage project in California. So they're continuing to grow, their energy storage business, which is really under publicized, I think, in addition to their well-known, auto business.
Yeah, I mean, to me, in terms of company news, which to some extent may already be in the stock. So everyone that thinks that, hey, well, the Model Y is coming. Well, listen, when you consider any company, understand that everyone else is also reading the news. Anyone that's buying the stock is also understands everything that you already understand. And so if you're waiting there saying, well, Model Y sales are going to be, well, if that's understood by the stock market, that's then kind of priced in. So it has to be something that's largely sort of undiscounted, unappreciated about the stock that's going to bring the next big buyer in to bid the price higher. So when I think about that, I think like the part of the Tesla story that is least understood is what you mentioned, which is the sort of energy battery kind of part of it. And they're definitely starting to really push solar roofs in a big way. Because when I go to check on where my Cybertruck order is, I'm so excited to get it. I see that they're really starting to push that. And then their battery business, which is an industrial scale business, which competes with the utilities. That too, they're pushing out in a big way. And then the other one that I think is also underappreciated is their potential sort of robotaxi, their sort of artificial intelligence mobility network.
For sure. Yeah, they've got one of the most advanced self-driving platforms in the world. I mean, no other car can you do anything remotely close to, summon your car from a parking lot to come pick you up wherever. So yeah, it's very impressive. And I do absolutely see that transferring to robotaxis, which are going to be a big part of transportation in the future.
Yeah, those are the two parts of Tesla that are less understood. The actual straight up just car opportunity, that part is somewhat understood because at this point they've got the Model S, the Model 3, Model X, Model Y, the Cybertruck, and then the Semi, which is out there. So it's now on top of that, which is what can they layer on top of that? And given that it's an electronic platform, everything that Facebook or Amazon, anybody can do. They can integrate with software, which no other transportation mobility company at this point can yet.
Yeah, not even close.
Not even close. So the idea of comparing it to Ford or GM, which we've always thought was kind of amusing, really is kind of ridiculous because nobody else can do it. All right, Ian, we've gone long on the Ian Cast. Anything else you want to tell folks before we end today?
No, I think we pretty much summed it all up.
All right, Ian, you go first as usual, and then I'll go last.
All right, everybody. Happy Friday. Have a great weekend and stay safe.
Happy Friday for me as well. And Ian's going to be solo next week on the Ian Cast, but I will be back soon. This is Paul saying bye.